What is up, guys? This is your boy Awesome with Investify, and today I'm going to tell you why I believe the stock market is going to crash soon. So, let's get started. What we're looking at right now is the chart for the S&P 500, which kind of calculates the top 500 companies in the stock market. All right. Now, some really interesting things have happened in the past couple of weeks. So as you can see that as the year started, 2018, this right here, we saw on January 29th, the week of the January 29th, there was this huge drop from the high of 286.43 all the way to 275.45. So pretty big drop. But then it continued into the next week and it dropped all the way to 252.92. So the high that we've reached so far this year is 286.63. All right, that's the highest the S&P 500 has ever been. And in 2 weeks, it dropped all the way to 252. So it dropped close to 34 points or around 12% drop in just 2 weeks in the market. That's kind of a big deal. All right. So whenever something like that happens, just right away, you can see a couple of things happening. You see this huge increase in volume, like sellers, all right? But then it started to pull back the past couple of weeks, which is kind of good. People are feeling better. But there's something else that's happening. What we have to notice here is that the market is not making new highs anymore. The price is not rising anymore, right? It's kind of stabilizing in the 270s so far, but it's not increasing. There are no highs. And there's kind of, even though it's going up, right? It's closing in the green, it's closing in the positives this month. The volume is decreasing. So that's always concerning. Now, I believe that I don't think that it's going to go above 286.63. I believe that it's going to start going down. And there's another reason for that. So I'm just going to show you the volatility index, VIX, which is the S&P 500's volatility index. And the more volatile this index becomes, that means the more fear there is in the market. It's also called the fear index. Okay. So what you want to keep in mind is the number 20 here. Okay. Anything below 20 means that the market is doing good. So as you can see right here, all right, this is all of 2017. We never went above that number of 20. So anything below 20 means market is calm, the investors are not worrying about the market. But what happened a few weeks ago? So let's take a look at the week of January 29th. The volatility index rose almost up to 18. But then the week after, the first week of February, and we see the price go from 18 to 50. That's really concerning because if 20 is supposed to be where people are getting concerned about the markets, 50 is pretty high. And I'll tell you why. All right, let's remember history repeats itself. Okay, that's how the markets work. And I'm going to go to the glory days of, you guessed it, 2008 and 2009. All right, so that's what I'm going to show you right here. And as you can see, majority of 2008, we started to notice a pattern that there was increase in volatility. This is actually as early as October of 2007. All right, interestingly enough. And it went up all the way to 35 in early 2008. And then, March 2008, it was above, 35. And it came down, right? And people were like, oh, okay, we're still calm. But still above 20 here, okay? And let me just put a line here to kind of make a point, all right? Okay, all right, so I'm gonna put this line around the 20 mark so we can just see what's happening, all right? So this line is right here. This is the 20. And as you can see, on August of 25th, the week of that, this closed above 20, all right? This closed above 20 right here, right on this one. It closed and then it shot up. right? August of 25th, all the way to October of 2008. And it stayed above 20 until it dropped right here, right in end of 2009, near October 2009. So August 25th, 2008 till October 2009, this thing was still above 20. And I think it stayed, actually, let's just go all the way down to, wow. Yeah, so it first dropped below 20 in December of 2009 from August of 2008. Now, why is this so important? Because let's go back to S&P 500 again, and let's look at the dates between August 2008 till December of 2009. What did the market do at that time? Okay, so here we have, see, in 2007 the market had started declining. So here we come to August of 2008. Yep, this was the point. And we saw it drop from a high of 130 by March to 67. Over 50% of the market was wiped out, right? Something we saw in the similarly happen. So even though that the market rebounded afterwards, there was still fear in the markets, and we saw it that there was a huge drop, right? So so that's why the VIX was so instrumental in kind of seeing what's happening, right? So till, yeah, this is till March, it was already dropping below 40. So the idea is whenever the price goes above 20 for the wicks, it's something to be concerned about, all right? And that's what's happening right now. It happened for 2 consecutive weeks. In fact, even right now, it closed below 20, but for majority of the week, it was above 20. So these are a few things that makes me concerned about what's going to happen with the market, because I believe it might pull back till around the 12 range for a while, but then it can just skyrocket again. And that's when a big market drop is going to come. So going back to S&P 500, where do I think the price is going to land? Well, let's take a look here, all right? And what we're going to use is the Fibonacci retracement here, okay? Fib retracement. And we're going to take the lows out here of 2016, and we're going to build it right here. Now, Fibonacci retracement is actually a really good guesstimation indicator to use. So a very strong number on this is the 0.5, which is around the 230, 240 range, all right? So I believe that it'll easily drop to 240 once the market starts dropping, okay? But 0.618 is a very powerful number, and I genuinely believe that that's another space that it can drop into the 220 to 210 range. And from there, we can perhaps see the market go back up. Now, another thing that I want to look at is, so we've seen the S&P 500. It's not making new highs. Even though it's going up, the volume is low, which is a huge concern, right? We're seeing the fear index and how it is starting to increase in value over 20. Now, the thing that I want to focus on is also something that a lot of people don't know about. This is the Home Builders ETF, all right? This is telling you what's happening with the prices of home. Now, let's see what happened in 2007, 2008 with this ETF, all right? And if anyone remembers, the market for, housing market really collapsed in 2009, right? But it had been in a downtrend for all of 2007, all right? And 2009, 2008, this is around August 25th is right here, where the fear is increasing in the markets, right? And September of 2008, look at what happens to the housing market. It just nosedives, right? And that's when obviously the poor banks that we have needed more funding and injecting into the system our money so that they can build a business again. So this started to drop. right? And that's concerning too, because that means that possibly houses are overpriced right now, and there might be a market correction coming for that. And as you can see, we have seen it go from the high of 47 all the way to the low of 40. So we've seen a good 15%, 16, 17% drop in just a couple of weeks in the housing home builders ETF that's out there, the housing market. Something very interesting to look at. So when you try to collect these information, right, when you're looking at that the volume is not increasing. Now, why isn't it increasing? You have to realize that institutions and hedge funds and banks, they cannot take all the money out instantaneously, because the moment they do that, the market's going to tank right away. So every step of the way, they have to take out a little bit, step by step. And that's what they've been doing. So the market, in my opinion, has topped, and it's actually going to have a correction. And I think it can, yeah, drop to a good 220 to 240 range. It can. So there are these concerns. Now you're like, okay, Azam, that's great. You're telling us that the stock market is going to crash, but what do we do? How do we protect ourselves? So there's a few things that you can look at. One thing is that you can get into cash. You can get into dollar, and there's something to look at here, which is the dollar index. And as we can see, the dollar index been dropping for a while, but it's hitting this support level from which it's building a base, from where it's not going down anymore. But if anything, there might be a potential for it to go up. So your dollar can add value. Another thing to look at is the gold index. What's happening with the gold market, right? And the gold market is an interesting place. It's near this resistance level. So it can either drop, or it can continue to rise and go much higher, right, into the 150s. So the best thing you can do is probably put your money into cash, but also look into alternative investments like gold. And let's look at what's happening with our favorite oil. So oil's been in an uptrend, surprisingly, and since the supply cut has happened, it's gone up from its low of $8 out here all the way to $13 over the past 8 to 9 months. And this might continue to happen because, of course, we need to increase the prices of oil. So some alternatives are available that where you can invest in these things. But as right now, as an educator, what I'm looking at in the markets, we have been closing a lot of our positions, that I believe that one should be more cautious at this point. Understand that this is happening. And this is not the first time. History repeats itself. You have seen what happened with the fear index, the VIX, in 2008, 2009. You're seeing what's happening right now. What happened with S&P 500? What happened with the home builders ETF? So, you can look into this, you can do that, or I don't know, maybe there is something else that you can invest in, perhaps a little bit of Bitcoin. Who knows? Maybe because the Bitcoin market is not correlated with the US stock market. So this could be a good opportunity to invest in. Well, guys, I hope that this helps you understand what's happening in the markets. If you have more questions, join us on Investify. We have a free course on investing in the stock market. It's a free video training. Join us, learn from it. You have any questions, please send them our way. We love working and we love teaching this stuff, and we want you to protect your capital and build wealth simultaneously. All right, guys, have a great day. This is your boy Azam. Take care. Peace.